Hello everyone, how are you? New update. U.S. stocks seesawed in a volatile trading session Monday as the White House remained defiant even after President Donald Trump's rollout of shockingly high tariff rates on most key U.S. trading partners has caused a market meltdown. Stocks mounted a short-lived rally shortly after the open that took the Dow Jones Industrial Average into positive territory. Speculation of some sort of tariff pause circulated on trading floors and social media and may have contributed to the pop. The White House told CNBC that any talk of a 90-day pause was fake news. Major averages then fell again as the session continued. The S&P 500 lost 1.7%, off its earlier lows that briefly brought it into bear market territory. The Dow Jones Industrial Average fell 920 points, or 2.4%, following back-to-back 1,500-point losses for the first time ever to end last week. The Dow was down 1,700 points at the lows of the session. The Nasdaq Composite declined 1.4%, falling further into bear territory. Trump's initial unilateral 10% tariff went into effect Saturday. Investors were hoping for news over the weekend that the Trump administration was having successful negotiations with countries to lower the tariff rates, or, at the very least, was considering delaying the set of so-called reciprocal tariffs due to take effect April 9th. Instead, the president and his key advisors played down the sell-off. Trump said Sunday evening on the market sell-off, "I don't want anything to go down, but sometimes you have to take medicine to fix something." Trump added, "We have $1 trillion trade deficit with China, hundreds of billions of dollars a year we lose with China. And unless we solve that problem, I'm not going to make a deal." Commerce Secretary Howard Lutnick told CBS News that the tariffs would not be postponed. "The tariffs are coming. They are definitely going to stay in place for days and weeks." Treasury Secretary Scott Bessent noted to NBC News that more than 50 countries have approached the administration for negotiations, but cautioned they've been bad actors for a long time, and it's not the kind of thing you can negotiate away in days or weeks. Investors were surprised first by the magnitude of certain rates applied to trading partners that appeared to be based on a formula without a valid rationale based on established economic theory. They were rattled further when China on Friday decided to retaliate with a 34% tariff on all U.S. imports, instead of negotiating first. "The president is losing the confidence of business leaders around the globe. This is not what we voted for," wrote Bill Ackman, billionaire head of Pershing Square, on X. "The president has an opportunity on Monday to call a timeout and have the time to execute on fixing an unfair tariff system. Alternatively, we are heading for a self-induced economic nuclear winter, and we should start hunkering down." While the administration said at least 50 nations had reached out to start negotiations, Canada and the European Union were planning to follow China's lead and readying retaliatory tariffs against the U.S. Vietnam has offered already to cut tariffs on the U.S. to zero, according to Trump, but trade advisor Peter Navarro told CNBC on Monday that wasn't enough and that it's the non-tariff cheating that matters. This suggests negotiations could be drawn out longer than Wall Street would like. Fears grew on Wall Street that the sell-off would feed on itself with hedge funds forced to sell down equities and other risky assets to raise cash needed to meet margin calls. The CBOE Volatility Index, Wall Street's fear gauge, surged to the 50 level early Monday, an extreme level seen mostly only during bear markets. "Margin calls are going out as we speak," said Chris Rupke, chief economist at Fudbonds. For a third straight day, investors in U.S. equity markets have turned huge thumbs down on the White House Liberation Day tariffs, which have rocked Wall Street. The contagion spread to other assets and around the globe. The price of Bitcoin tumbled below $77,000. U.S. crude oil dropped below $60 a barrel to a multi-year low. Hong Kong's Hang Seng Index dropped 13% for its biggest decline since 1997. Germany's DAX index lost as much as 10% during Monday's session.